Hello, and thanks so much for checking out the Coin Stories podcast video page. I'm Natalie Brunell, and I'm talking to the leading voices in Bitcoin about their backstories, career paths, and their philosophy on crypto. This podcast does not provide financial advice. I'm super excited to share my guest this week is Bitcoin bull Anthony Scaramucci. Anthony is managing partner of the global investment firm SkyBridge Capital, and he's been named one of the 100 most powerful people in global finance. You might also remember his very short stint as White House communications director for Trump, but he is no longer a fan of the former president. If you like this conversation and want to learn even more about Anthony's background and origin story, we actually had another fascinating talk on the Career Stories podcast, which I will link in the description. So without further delay, here's Anthony. Anthony, it's so exciting to have you back on my podcast. We talked a couple years ago about your whole backstory. So I know that we already have that for listeners to kind of check out and download the full thing if they want to, but let's refresh some things because I think some things were really inspiring. So starting at the beginning, your family's from Long Island, kind of an immigration story, going back and forth Italy and then New York, but you grew up sort of a middle-class life, right?
Well, you have a good memory because my grandfather on my mother's side was actually born in the United States, but they returned to Italy as a result of a family illness. And so he was born in the United States. He lived in the US for 7 years. And then he spent the next 7 years back in Italy and then came back to the United States at age 14. So the rest of my grandparents lived in Italy and emigrated from Italy. But the reason why I think that's interesting is that he was ahead of my other grandparents. You know, he had his own repair shop and he was a super hard worker. And it did better from a financial perspective than, say, my dad's father, who ended up in a coal mining town in northeastern Pennsylvania. A little bit of trivia. My dad grew up about 7.5 miles from Joe Biden. They're separated by about 10 years, but they were, close to each other. And when I met then Vice President Biden for the first time, we were regaling each other on the different local restaurants in the area, which for whatever reason have lasted multiple generations. And weirdly, those immigrant towns have some of the best food, whether it's Polish or Russian food, or in the case of my family's upbringing, Italian food. You wouldn't think that, but northeastern Pennsylvania has some of the best restaurants. But anyway, my parents, none of them went to college. My grandparents, nobody went to college. So going to college was a big deal in my family for my generation. Going to law school was even a bigger deal. And I probably told you this, but it is a funny story. My mother thought I was going to Harvard Law School, yeah. Natalie. She had no idea. We still tease her. She's 84 years old. And she had absolutely no idea that I gotten into Harvard. And she was like, she had the map out and she's like taking me. I said, Mom, what are you doing? We're going to Harvard, right? I said, no, Mom, we're going to Harvard. Why the hell would they call it Harvard Law School if it's not in Harvard? It's not called Harvard Law School, Mom. And that's been a joke in the family for 30 plus years.
Well, so I want to talk a little bit more about what inspired you to study economics in school, because I remember you saying that your dad was a union member. He was Republican. You grew up this sort of life where you were never wanting for anything, and you decided to study econ at Tufts. Why did you want to do that?
Well, I was focused on money. I will confess that we lived in the middle class and we had a great life. I would never dishonor my dad by telling him I grew up poor, but we did have a budget. And if my dad had his work hours cut, well, you know what? Our budget got cut. If my dad had his work hours expanded, particularly because he got overtime, he was getting paid time and a half, and in some cases double time on holidays. Those were very good days for my dad because it meant extra income for the family. So, I studied econ because I was like, okay, I'm going to go start my own business someday. I ended up going from econ into law school. And this is probably naive of me. And I don't know if I shared this with you, but I read an article in 1985 in Time magazine. It said that the Wall Street lawyers were getting paid $65,000. I'm like, okay, that's like probably double what my dad's making. I was like, my God, I can go to law school and get a salary like that in my first year. And I was like, okay, so that's what I'm going to do. I wish I had better critical thinking skills, and I wish I had like less simplistic thought process, but that's what I did. I ended up going to Harvard Law School. I liked it, but I didn't love it. And so I spent my time at Harvard trying to figure out a way to get into the business community And of course, I ended up at Goldman Sachs. That was a big game changer for me. And did I tell you the polyester suit story? Because I tell people that story too. That was another mortifying story in my life. I showed up at my Goldman interview. I mean, I'm very finely attired with my Kiss Kiss Club shirt. This is obviously a fake club, but this is a club that was profiled in the second James Bond movie with Sean Connery. So my kids bought me this because they know I'm a big James Bond fan, but it's not. It doesn't even exist. But in any event, I'm in the polyester suit. I have a polyester shirt on, Natalie, and a polyester black thin tie. Okay, so I'm fully flammable for my first job interview at Goldman Sachs. Somebody strikes a match, I'm going up in flames. And I'm sitting there, my hair's blown back like Tony Manero from Saturday Night Fever. And the partner, she was great by the name. I'm going to tell you her name, by the way. She was great. She's like on the board of Procter and Gamble now. Her name is Suzanne Nora Johnson. She said, "Hey, could I see you for a second?" I said, "Yeah." Takes me outside the interview room. She says, "Listen," she said, "you're a smart kid, but you are the worst dressed person that we've met at the Harvard Law School. And I can't invite you down to Goldman Sachs looking like this." And I remember being mortified, because I thought I looked fine. I bought the shirt and suit from Cy Sims. It probably cost me $90, So I went and got a credit card and I got myself a Brooks Brothers suit and I went down to Goldman. But I like telling that story to young people because, you're incredibly naive. You're just getting started. There's a rite of passage. If your parents aren't in white collar jobs, you don't really know the white collar culture. And so it took me a while to get adjusted to all that.
Well, I love another story that you shared that I want to get to. But first, I just have a super quick question about your economics education at Tufts, because one of the things that Bitcoin has helped me learn about is sort of the difference between the different economic theories, the Keynesians versus the monetarists and the Austrian school. And one of the things that, I don't know if you know the author, Saifedean Ammous, who wrote the Bitcoin Standard, he talks a lot about how the university system in this country as well as around the world primarily teaches Keynesian economics, and that reinforces sort of this like central planning at the heart of our government policy. Is that what you learned? Were you exposed to Austrian economics at all?
Well, I went to school in the 80s. So Ronald Reagan was president at the time. I was a lifelong Republican, as you pointed out. My dad's union was controlled by Republicans, which is sort of a obscure thing. Most of these unions were controlled by Democrats, but out here in Nassau County, the Republican Party had the stronghold with the union. So I studied Keynesian economics, but I also studied Austrian economics, the Chicago School, which is sort of a derivation of Austrian economics, which is sort of Milton Friedman, and inspired a lot of free market activity. And of course, Milton Friedman is one of the grandfathers of the monetarists that believed in the constancy of money and that we should have our central bank should be controlled by a computer, as opposed to the political capricion of a policymaker. But in any event, here's what I would say to you, whether we like it or not. Keynes won, okay? And in the long run, we're not all dead. We're still here, okay? And so maybe some of us are dead, but our children are here and our grandchildren are coming, okay? And so we now have this very big dilemma because we're kicking the can down the road. If you really study Keynes, and I know you didn't bring me on here for an economics lesson, but if you really study him, what he was saying at the time, okay, is that he wanted there to be this ability to backstop people and to smooth out the cycle. But he didn't want the government or the people to become over-reliant on that. Okay, and so that's been lost now. Now we've gone from that idea, which was a light tap of government help to smooth out cycles, to modern monetary theory, where it really doesn't matter, just print as much money as possible and let's see what happens. I think that is going to be a failed experiment ultimately. I've interviewed the different people like Stephanie Kelton. You mentioned the gentleman that wrote the Bitcoin Standard. He was on my podcast. I interviewed him. The reason I'm saying the gentleman is I'm going to botch his name. I'm from Long Island, so we never pronounce names right. I think it's called Saifedean Ammous, I think is his name.
Saifedean. He's great.
Yeah. And he is a brilliant thinker. He's a brilliant critical thinker. And what I love about him, he's got very well-researched opinion. So it's not like he's just saying something and he's not fortifying it with a lot of academic research and historical context. And remember, we're human beings. And so one of the things that we can do is we can predict certain types of behavior. We have boom and bust cycles. We have fear and greed that drives our decision making. If you get to excess supply, it could be labor supply or supply of goods and services. It could touch off a recession. Those things all happen to us. But what we're trying to do now is we're trying to take the pain out of everything. And our ancestors didn't do that. They gave it a run and they took the pain. Now, the Depression was probably too much pain, and Keynes saw that. And so did Milton Friedman, I might add. Milton Friedman always said about Keynes that he understood where he was coming from. He just didn't like the long-term consequences. It's like if I do one line of cocaine, I never stop there. I'm going to do 500,000 lines of it, right? Which is why I've never done cocaine. So the point being is I'm being very long-winded. There's a big battle right now because the Bitcoiners are Austrians. The Bitcoiners, like safety, let's call them safety for the sake of this argument, recognize that if you have a constancy to the currency and it's not subjected to the whims of policymakers, that's actually long-term more beneficial to the society. And by the way, I have a lot of empathy for that because I came from a laborer's family. And so my dad, when he got his wages, remember his wages came from his time. He put his time in, punched the clock. They gave him money in exchange for his time. Mm-hmm. But if the Federal Reserve is printing money, then they just stole my dad's time. Does everybody understand that? So if you have dollar denominated assets, you just got taxed by the Federal Reserve because if they printed 37% more dollars and they put them in circulation over the last 18 months, well, then the purchasing power of your dollars has gone down. Yep. So you got taxed. And so that's fine for rich people. Calvin Klein just sold his house. He bought his waterfront estate in East Hampton for $3.6 million in 1987. He sold his house last month for $85 million. So it's denominated in fiat currency. So that's fine. The asset's there. It was worth a lot of money in 1987. It's worth a lot of value or money in 2021. But we wrecked the money. We took the money from $35 an ounce for gold to $1,700 an ounce. And I think guys like Safety or the group known as Satoshi Nakamoto, whoever that might be, a man or a woman, they understood that putting this sort of thing in place, if it worked and you had an explosion in the network effect, you could solve for this problem. And so, what I would tell people that are skeptical, well, it's an early adoption asset. And so study early adopting assets. They have a volatility curve to them. Amazon had a volatility curve. It's more or less seasoned now, 24 years later. But if you bought Amazon at its IPO and you put $10,000 into Amazon, then it's worth $21 million today. You would have had to subject yourself to a lot of downdrafts, maybe 8 or so downdrafts, but it's worth that today. And so it benefited from the explosion of the network effect, or what Robert Metcalfe called Metcalfe's law, that you could actually value things pursuant to how they grow. So Bitcoin is doing that, and Bitcoin's decentralized. One last point, I know I'm being long-winded, but you're talking about Austrians and monetarists. They would tell you that things that are decentralized work better because you put power in the hands of the people. And don't underestimate their intelligence with their own money. They'll probably do a better job than you can from a central planning position. And if you study history, that's been the case. That's been the winning argument over long periods of time.
Yeah, no, I love so many of the things that you said, and I want to dig into some of them a little bit later as we get into Bitcoin. But before we do, one of my favorite stories that you shared on my other podcast, and I just want you to touch on it a little bit because I found it inspiring, is when you were trying to segue from sort of law, you figured out that's not what you want to do, into the business world. I love how intrepid you were and tenacious at just going through the alumni book and trying to match up people who were alumni and Wall Street and just going and pretty much like asking for a job and asking for a raise at the first offer too. So can you share that?
Yeah, well, first of all, I'm impressed with your memory, but that was another sign of naivete, right? So here I am, I'm in the polyester suit. I just got out of, had the good fortune of getting into Harvard Law School. So I went over there. I mean, I probably told you this, but it's worth repeating. I get to the front desk. They say, hi, I just got accepted. You guys need a $250 deposit. I have $250 in my wallet. I'm taking the money out, and the woman's looking at me like, I can't take the cash. You got to bring a check. I said, well, I don't have a check. Well, okay, we'll go to the post office to get a money order. That's how the conversation started. So I went to the post office. I got a money order. I came back with the $250 money order, and she wrote my name down, and I now had my place saved at the Harvard Law School. Then I asked her for the recruitment book. And she said, oh, you can't take it out of here, but here it is. It was a big phone book. Okay. And then I asked her for the alumni directory. And then I said, okay, I'm going to be a Wall Street lawyer because those lawyers make $65,000 a year. Mm-hmm. And so I literally, Natalie, this is how naive I was. I went to Wall Street and I looked up the firms that actually were on Wall Street. And then I cross-referenced the names. Okay, so this guy's at Hughes, Hubbard and Reed. It's Worthington Babscom, the 39th, whatever the hell the guy's name was, right? And so now I went to New York. I got on the subway. I got down to Wall Street. I started at number 1 Wall Street. And I rode the elevator to the 28th floor, right? No security, pre-9/11, 1986. I'm at the front desk with my little Guido outfit on. And I said, hey, is, Worthington Babscom the 90th here? She looks at me, well, is he expecting you? And I said, yes, he is expecting me, actually. I'm going to the Harvard Law School. He is class of 1960. And yes, he is expecting me. Okay, hold on a second. And she goes in the back. He comes out. He's got the glasses on. He's got a pipe. He's got suspended. I mean, it's right out of Wall Street, right? It was the mid 80s. He takes me into this big, beautiful office. It's overlooking the Statue of Liberty. He says, what can I do for you, son? I said, well, listen, I have no money. Here's my resume. I just typed it up on a Panasonic typewriter. This is my grade point average and my LSAT score. I've got no money. I really can't afford to go to Harvard, but if you give me a job for the summer, you're going to help me pay for it and I'll work my ass off for you. And so he looks at me, he looks at my resume and he says, do you have any references? I said, I certainly do. And I gave him a sheet of references. As you can call my professors, you can call this person, that person. And I had on there, Lou Campanelli. I worked at the Key Food, stamping cans. I mean, Lou loved me. May his soul rest in peace. So he took the list. He said, okay, I'm going to start you at $8 an hour.
Can you make
it 10? And I looked at him. I did. Natalie, I looked at him. I said, could you make it 10? He goes, can I make it 10? I'm giving you a job for $8 an hour. You have the gall to ask me for 10? I said, yeah. I said, I need the money. I said, if I didn't need the money, I would basically work for free because I need the education too.
I love
so he said, all right, I'll make it 10. The guy was awesome. He was awesome. And he passed away, unfortunately. We lost him. He was probably 60 at the time. He died at age 90, but he was an awesome guy and he gave me a break.
That's awesome.
And but I did ask for the raise right then and there. Okay. So that was a little galling. I mean, who's kidding who? But you know what? How are you going to get there? This is what I tell my kids. How are you going to get there?
Yeah.
They get mad at me because I go on reality shows. I joined the Trump administration.
Mm-hmm.
Who the hell knows what I'm going to do in television next? And my kids are always mad at me. I'm like, okay, well, you know what? How the hell do you think we got here?
I love it. Maybe it's like the immigrant background, because I really relate to you. And that's one of the things that I love about just learning about economics and the crypto industry and all that, because coming from an immigrant background, it was always this like hustle, like you have to do whatever you can to survive, right? No one's helping you. You have no connections necessarily. And
where's your family from?
From Poland.
Okay.
Yeah, so when you mentioned Polish food in Pennsylvania, I was like, oh, I wonder what it
is.
is.
No, it was great. And listen, it was Polish, Welsh, Russian Orthodox, Italians, and Irish. That was the area that my dad grew up in. And so you could walk into any of those restaurants. It was all homemade food.
Yeah. Well, I mean, and I totally relate to that sense of just, wanting to grow up and be secure, financially secure. My family came here wanting the American dream, and it's so sad to me that for so many, the idea of an American dream is such an obstacle today. And I think part of it is some of the things you were mentioning, where we're kicking the can down the road, we're printing so much money, people are essentially getting taxed on whatever they're making and they don't realize it. They're not maybe smart enough to navigate the whole stock market and investments, and crypto's so new and it's explosively volatile. So yeah, we can talk about some of that more, but how did you...
Listen, here's the thing. Here's another thing, because you got a lot of young listeners. It can be intimidating. And also you get this anxiety about failure. Okay. So I tell people, hey, if you're ever having a bad day, think of me getting fired from the White House, okay, blown into Pennsylvania Avenue, and then rolled by every late night comedian. Okay. You can survive a bad day.
Yeah.
Don't let your fears of failure stop you from your dreams. That is a very big lesson. And, I've been burnt up a few times. I got let go from my first job at Goldman. They were downsizing. Then they rehired me at Goldman. I've had my ups and downs. And you kept your
severance check.
I did. I cashed the severance check. Yeah, you have a good memory. Yeah, it was $11,000. How great was that, right?
Well, so how did you get hired at Goldman? And then I thought it was amazing how you obviously got to a position in the 90s where you wanted to go off, start your own business. And I remember you making the analogy of, jumping off the cliff and you're sort of building the plane on your way down, you're figuring things out. And that's what you do as an entrepreneur. And I can kind of relate to that now that I'm leaving the news business that I've been in for the last 10 years to go into this industry. So tell us that story of like Goldman to starting your own business.
Listen, and here's the central thing. I tell kids, go do it. Okay. Who cares? If you fail, you're going to learn a lot about yourself. Okay. Are you a piece of bone china that crack the minute you fail? Or are you a Super Bowl where you hit the floor and you can bounce super high? You got to learn about yourself. I had so many different setbacks. I don't even know where to start with the different setbacks, but each setback has a different set of learning lessons. And then in those learning lessons, you're building yourself up and you're like, what? Okay, I just got blasted by the COVID-19 pandemic in my core portfolio. Okay, no problem. What are we going to do? Well, you know what? I've been studying crypto for the last 3 years. We're going to shift some of these assets into cryptocurrencies because I think the scalability is starting to happen. Lo and behold, we do that. We're up 50% from the bottom. And the people that left were mistaken, and the people that stayed have been rewarded. And so the point is, you're going to figure it out. That's the message, Natalie, okay? Whatever fear you may have right now, I can relate to. Whatever fear you have, I get. And there's another thing that goes on too. There's a self-consciousness related to status. So I can remember I was at a cocktail party. I had just started my business, and one of my friends from law school was at the cocktail party. He was at Goldman. He was there with his wife, and he looked over at her and he said, "You see, Anthony, he's a train wreck. He's had so many different failures. I haven't failed at anything," he said. Okay, and I looked over at him. I said, "Well, maybe you're not trying hard enough. Maybe you got to fail a little bit." And the point being is, right away about your personality. You wouldn't be doing what you're doing if you couldn't accept a downgrade in social status, if you couldn't accept the scorn and potential envy of people that don't have the skill set or the personal freedom or the courage to do what you're doing. But the flip side of it is you'll have that experience that you could take with you the rest of your life. Look, I failed as the White House communications director. Who's kidding who? But I did fly in Air Force One 3 times, and I was hanging out in the West Wing in the Oval Office. Okay. And I got an 11-day PhD on what these guys are like, the shenanigans they pull on each other,
Well, how did you get to Goldman Sachs? I want to hear that whole story again. What was your career like before you started your own business?
So I got to Goldman Sachs because I went to Harvard. Who's kidding who? I had a Harvard degree and I had really good grades and I was very persistent. I didn't get a summer offer from Goldman, but I did what Goldman likes. I want to come work for you. They say no. Okay, no problem. I want to come work for you. They say no. Okay, no problem. I want to come work for you. Like, this guy really wants to come work here, and he's doing well. And we're going to take a chance on him. But I did something really stupid in the beginning. I started in the investment banking area. Now, why did I do that? Because I was an insecure kid, 25, and I wanted the coolest job coming out of school. So what was the coolest job coming out of school? That was to work in the investment banking area and in the real estate area.
Yeah.
Again, that's 31 years ago. Maybe that job is at Facebook or venture capital or starting your own company like you are right now. But that was the coolest job. I wanted to go to the cocktail party at the end of law school. And, what are you doing next year? And I was going to like saunter around and tell people that I was at Goldman in their investment banking area. Stupid. Why was that stupid? Because I sucked at that job, Natalie. I sucked at that job. Instead of choosing a job that I was going to be good at, I chose the job that I thought was going to provide me social status and the totems of success, as opposed to a real opportunity to make it. And so I sucked at that job. They had a recession. The Gulf War started in 1990. And on February 1st, 1991, I got fired from that job. I can tell you exactly the date. And I can tell you it was a Friday night. It was freezing cold in New York. And my boss invited me to his apartment. He handed me a beer. He says, I got bad news for you. You're fired. He handed me the beer. I said, I'm fired. He goes, yeah, we're letting a lot of people go. You frankly suck at the job. By the way, you're a good kid and you're a hard worker. I could probably keep you, but that's not the best interest of you. The best interest of you is to help you go find something that you're good at. And so I said, okay. I went home that weekend. I was devastated. And then by Monday, I had to pick myself back up. I had a roll of quarters. I was back in New York City pumping quarters into pay phones. And then one of my buddies is like, well, there's a job opening at Goldman Sachs. I go, you got to be kidding. Because it's a lesson to your young people. Don't burn bridges. The guy that fired me, I called him. I said, hey, Mike, there's a job opening in the sales area on the asset management side. He said, there is? I said, yeah. I said, I think I could be pretty good at that. And, you like me. He said I was a hard worker with a good attitude. Would you at least help me get that interview? Amazing. And he said, no, absolutely. I'm going to call that guy right now. And I'm going to help you get the interview. So he helped me get the interview. I went up the stairs. I got the interview. They hired me. And then that's where the personnel people came into it, because my first boss fired me. He gave me an $11,000 severance check. So now Tony Infante, I'm going to use her name, actually. She was terrific. She was head of personnel. She calls me. She's like, listen, I got a really good news for you. I said, what's that, Tony? She said, well, we're never going to have to tell anybody that you got fired. We're going to mark you down as an interdepartmental transfer because you're transferring one department to the other. And, you were only out of the firm for 2 months. I said, okay, that's great. She goes, can we get the $11,000 check back? I said, no. I said, I've already spent it. I was trying to get out of polyester. I said, I've already spent it. I'm like trying to, get my school debt down. I'm trying to buy, real natural fiber clothing.
I love your stories. They're so
I said, no,
good.
You can't. I'm just telling you, you can't. But you know what? She was great. She loved me. She was like, you know what? And I'm going to tell you what she did. She marked me down as interdepartmental transfer anyway. She didn't care.
Well,
but I tell people I got fired. I don't have any shame in being fired. When I got fired from the White House, that was the second time I got fired. It wasn't even the first time.
Well, obviously,
I know how to handle a firing.
You did well in this new department, and I remember you saying in the other podcast that at one point, like, you were doing really well. You were making like over $1 million a year, and that gave you the confidence to want to go off on your own, right? So
that's where entrepreneurs are also stupid. Okay, who's kidding who? Fred Smith told me, the founder of FedEx, he goes, man, if I knew how hard it was to start FedEx, I never would have done it. But here I am, blindly stupid, wackadoodly overconfident. I was making a lot of money in the mid 90s, 7 figures plus. And I went from making like $1.3 million a year to $0 a year, start my own business, because I had this exuberant confidence in myself. And then you get met with reality, right? You get thrown cold water. Now you don't have a brand. Now you're worried about your own phone system and your technology and your, do you know what a Pitney Bowes machine is? You're probably not old enough to know what it is. Okay. A Pitney Bowes machine is you buy it from Pitney Bowes and it's hooked into the post office. So when you're sending out mailers, it'll stamp the thing for you. Yeah. Okay. Those things are ridiculously expensive. Okay. You don't even have those anymore. And I think they have like stamps.com or something like that. But the point being, it was hard to start that business and it was new and you couldn't rely on anybody. You were building your own brand by yourself and it was remarkably naive of me. And it took me a while to get the hang of it.
So how did you go from?
But I'm 100% glad I did it, by the way. I will point that, and you will be too. You'll be 100% glad that you did it.
Thank you so much. I'm happy to have your blessing. I want to hear how you built SkyBridge. So you went from you were managing assets, right? It was like a personal management firm, but then you went into the hedge fund industry. I know you wrote
Yeah.
a book about hedge
So
funds.
I had a registered investment advisor with one partner. The guy was a great guy. He's now retired. And we got those assets up to like $1 billion. And then we sold the company to Neuberger Berman. I don't know if you'd heard of Neuberger. It's a very large asset manager in New York. At that time, it was a publicly traded company. And so we sold it to Neuberger. It was October 22nd, 2001. So it was 6 weeks after the terror attack and the tragedy of 9/11. So it's 20 years ago this coming October. And so it was, it was a liberating transaction. It made us financially independent. It was enough money where Andy and I looked at each other and said, okay, that was really good, and it was only a 5-year business. So we sold it, and I worked at Neuberger Berman, and then Neuberger got bought by Lehman,
yeah.
2 years later in October of 2003.
Mm-hmm.
Lehman's a great company. I thought it was, at least, and so I was there, but I was getting bored because you know why, Natalie, this is going to happen to you. Okay. Be careful what you wish. If you end up selling this business that you're starting, you're going to be like, oh, now I'm working for people again. And, you lose all of that adrenaline rush of being an entrepreneur. So I was like, oh shit. And I went to Dick Fold, the CEO, and I said, listen, please don't be offended. I fulfilled my contract. You guys are great people. I'm making very good money, but I'm an entrepreneur. I want to go start my own business. And so I did. And he actually gave me balance sheet capital from Lehman. He gave me like $10 million. And I started my own business.
And that was for SkyBridge?
That was SkyBridge. That was March of 2005. So how did the politics come into it? The politics came into it because I didn't have a network, Natalie. And so I was from a blue collar family. And even though I went to Harvard and there's an old boys network there, I was a young boy in an old boys network. I didn't have a network. I didn't play golf. I didn't hit tennis balls. So I ended up going to political campaign fundraisers. Why? Well, that's where wealthy people hung out and influential people. And I was, try not to laugh because it's crazy now, but I was young Republicans for a guy named Rudolph Giuliani. You ever hear of him?
Oh, wow.
I mean, he lost his mind, but he was like running for mayor back then. He lost that race. I wrote him a $250 check in 1989, and he lost that race. And that was good for me because we became friends, and he helped me grow my business. He helped refer me to people. And then I ended up working for Mitt Romney and Jeb Bush. And then in comes Donald Trump, and I make the faithful decision to go work for him. And that was a mistake. Ultimately, that it was fun for certain reasons, and it raised my profile, and I got a lot out of it. But it was also a mistake because he was the wrong guy for me to work for. And so again, don't let your pride and ego get into your decision making because you'll create really bad outcomes.
Well, it was interesting to hear you talk in our last interview just about how many politicians that you meet and interface with if you work on Wall Street, because obviously they're going and they need to fundraise and campaign and ask for money. I remember your funny story about Obama, who I know went to Harvard Law School, just not your class. But just out of curiosity, with the whole fallout, I mean, I know you were White House communications director for about 11 days. At first you would defend Trump, but then there was obviously this big falling out. Now you are anti-Trump. What happened there? And what made you kind of
listen, when I got fired, I thought it was very important to be loyal to the administration. When I got into the administration, even though I was there for 11 days, some of the things that were going on were alarming because he was running things in a very chaotic way. Obviously, I made a mistake. I will never blame anybody for my firing. I think I mentioned this to you. General Kelly and I are good friends today. He comes to my events. We've had a couple of SALT conference appearances from General Kelly. So General Kelly and I have a very good relationship, but we both saw a little bit of instability in Donald Trump. And now the problem is you want to be loyal to the Republican Party and you want to be loyal to America. And so you don't want to be overly critical. But he kept moving the goalposts. And so there was one night I was on the Bill Maher show, and I was actually defending Donald Trump. And Catherine Rampell, who works for the Washington Post, at least at that time she did, she looked at me and said, well, what about the squad? And those are the 4 congresswomen that Donald Trump said go back to the countries they originally came from. So imagine the immigrant story of your life coming from Poland, and your Polish ancestors were told to go back to the country they came from. Well, they did that to my grandparents. They told them, the racist American nativists, they said, go back to the country you came from, go back to Italy. And that used to upset my grandparents. So all I said on the Bill Maher show was, listen, I wish the president wouldn't talk like that. I said, it's racist. I said, what happens is it hurts people's feelings. They did that to my grandmother. She used to talk about it when I was a kid. It's un-American. Don't talk like that. Here are some good policies, but that's something you shouldn't do. Well, Bill Maher says to me at the end of the show, you're in trouble now. I said, what are you talking about? He said, well, Trump is going to attack you tomorrow on Twitter. I said, no way. I gave the guy money. I've been loyal to him for 2 years since I got fired. There's no way he's going to attack me on Twitter. Sure enough, the next day he starts attacking me on Twitter. So I don't know. This is my second interview. Do I look like Ted Cruz to you? I mean, I'm a New Yorker. I'm from Long Island, from an Italian community. I grew up in a neighborhood. You think I'm going to let Trump attack me on Twitter? So I think I called him the fattest president since William Howard Taft or something like that, just because I know his fatness like really rankles him, you know? And then he flipped out and he started attacking me some more. And then, of course, I was firing back at him because I don't care. And then he did, he broke the cardinal rule. He went over the line and he started attacking my wife. Now, my wife and I were having marital problems at the time, which were well documented in the tabloids. We subsequently patched up our marriage. And so he started saying stuff about my wife on the presidential Twitter feed. I mean, who does that? Only Donald Trump. Okay. So that was it. I took the gloves off. I said, I'm going to knock this guy into next week. And then I spent 6 months of my life, like just, pounding the guy, Wow. And I don't know. Listen, I told the truth. Guy was very bad for the country. Some of his policies were okay, but his temperament and who he was as a guy is very un-American. You can't act like that as the president. Now, look, are we going to have the perfect politicians? No, you don't want to act like that. That's just my honest opinion. But, I'm an Italian kid from a neighborhood. You don't go after your family members. It's just pick on me. I'm a public figure, but don't go after my family members.
For sure.
So anyway, that's how the fight started. And, so far, the fight hasn't ended yet, though, because he may run again. We may have to get in there again, which I'm totally ready for.
Well, I kind of want to segue into Bitcoin, but I have a quick question just about politics, since you have had so much exposure to really politicians on both ends of the aisle. One of the things I found interesting about Bitcoiners is, first of all, they see Bitcoin as very bipartisan, and they also see politicians on both sides as just sort of continuing this problem of money printing and adding to our deficit, and sort of how you mentioned before, again, like kicking the can down the road with regards to how bad things are in this country. So what are your thoughts on that? Because no matter who we elect, it seems like you just have to go with the status quo, right?
Yes. I mean, unfortunately, and this is something we were talking about before the podcast started about the California recall, you can be dissatisfied with what's going on, but then you don't have tremendous options. And so unfortunately, what's happened is we've now got this very well-oiled political class, and they've worked super hard at maintaining the status quo. And so even though you're upset potentially with policy or the direction of the country, you don't really have a lot of choices. And then if you get somebody, and this is where I thought Donald Trump actually had promise, he was outside of the political arena, coming into the political arena. And frankly, if he had more self-confidence and more personal security, he may have been transformative, but he couldn't do it. He couldn't do what was necessary for that time, which is not focus on left or right, but what about what's right or wrong for America? And how about building a team or a coalition of people that are multifaceted, that they're ethnically diverse, they're, of different sexes, different sexual preferences, and different political persuasions, and saying, okay, it's not our job to opine on the political position. It's our job to fix problems. Here are the problems. What is the right thing to do for the largest group of the people? And by the way, even if the people are against us, but it's the right thing to do for them, then how do we handle that as well? And that's a big thing for political leadership. I imposed a vaccine mandate at SkyBridge. If people don't like it, they can leave SkyBridge. We can debate about the vaccines, but I believe in the science. However, I don't think you can have a national mandate because the country doesn't trust itself anymore. They don't trust their political leaders. But we did have a draft mandate in the 1940s when Franklin Roosevelt said, hey, we're going to war. Everybody said, okay, we're in, let's go. There's no real discussion about it. And you were giving up a lot more freedom in 1940 with a draft mandate, Natalie, than you were with a vaccine, you know? And listen, this is the great irony of Bitcoiners. And by the way, the guy that we're talking about, Safedean, is that his name? Softy?
Safedine.
Man, he's anti, and I would love to debate him on it because he's a brilliant guy. He would get very frustrated when you start probably calling me names, but he's anti-vax. But what I'm trying to explain to people is once in a while, we have to subordinate ourselves to the group to ensure our freedom. There's an irony to freedom. It's a collective process. Your freedom is actually tied to my freedom. So if we have a mortal invasion of the United States, we have to come together to protect our freedom. Well, we just had a mortal invasion. It just happened to be an invisible virus. So we have to come together to protect ourselves.
It's really fascinating how much more divided we are as a result of this pandemic. And I think
Yes.
a lot of people have been, I don't know, I think a lot of people actually entered into sort of this Bitcoin or investing space as a result of being either at home or their job was affected, or just like some of the crazy things that have happened in our market over the last year, including all of the money printing.
Federal Reserve, the money printing. Yeah.
Exactly. So let's get to chatting a little bit about that, because I know that you actually knew about Bitcoin back in like 2014 or something, or even prior to that when it was like $400 and you didn't buy in. And I know that the scaling was an issue, but how did you first hear about Bitcoin, and what got you to the point where you sort of went down the rabbit hole, really did the research that's needed to understand it to where you wanted to invest in it?
So very long story that I'll try to truncate. When I was in Washington as the White House communications director, people don't remember that I did spend some time at the XM Bank. And so I was actually at the XM Bank as chief strategy officer. And it became very clear to me that the US dollar is going to be digitized. They were not going to allow the Chinese renminbi to be digitized and have the possibility that the dollar would fall behind. And so they are working on dollar digitization. You probably know this already, but the US government owns about $6 billion worth of Bitcoin because some of it's been seized as property. Some of it was actually bought by the Treasury so they could understand the mechanics of it.
The Treasury bought Bitcoin?
Long time ago. Yeah, you can find that on if you Google how much Bitcoin does the US government own, the response is about $6 billion. And some of it is from, and again, they bought minuscule amounts, but they seized a lot of it from
forfeiture.
Yes, exactly. The
Forfeiture,
Colonial Pipeline situation where they got the money back, all that sort of stuff. But what's the government going to do? They're going to, for sure, they're going to digitize the dollar. And so when I got back to SkyBridge after my firing, I bought the URL SkyBridgeBitcoin.com. And I said, okay, we're going to eventually get into Bitcoin. That's the apex predator of the space. I said, but look, I'm an institutionalist. We're going to do a very deep dive. And we were studying these coins and the technology. And now we own about $700 million worth of coins. Most of it is in Bitcoin. Some of it is in Ethereum. We may own a few of the other altcoins at some point. I'm not in a rush. But I'm also, like I said, I'm not a Bitcoin evangelist. I don't think Jesus and Moses had a baby and they named a baby Bitcoin. I'm not religious about Bitcoin. And the other thing about me is I'm also a patient person. I don't have to rush into everything. But I started with Bitcoin. 6 months later, I got a piece of Ethereum, and there may be a few other coins that I'll own, and we own them as investments because we believe they will scale. They have these early adaptive properties like a Facebook or a Google or an Amazon. If those things are a social network, a search and advertising network, a retail network, Bitcoin is a monetary network. It actually is effective at that. And I'll say something philosophically, which I know you'll get because I follow you on Twitter. If we are right, the people that are owners of Bitcoin and believers in the blockchain, it will have a massive transformation of the way we do business with each other and the way we transact with each other.
Well, is Bitcoin something that you look at as just having in your portfolio in that like 1% to 5% range as almost like a hedge? And if it takes off, then amazing, but the risk reward is sort of what you think about? Or is this something that you actually believe could be like a global reserve currency?
It's a great question. And the answer to both of those questions, believe it or not, is actually yes. Okay. So I'm an incrementalist. I started at a 1% position. It got to 5 because of appreciation. Remember, I was buying these coins last year at this time. So because of appreciation, I've now got 20% exposure. So in other words, people say, oh, wow, you got 20% in Bitcoin. I say, yeah, but if I started with 5, didn't sell any, then it would make sense that I have 20% exposure. So the answer is yes and yes. It's becoming a big piece of my portfolio due to the success of the appreciation of the investment. But it's also, could it be a monetary standard? And I think the answer to that is undoubtedly yes. Now, if you read the Bitcoin Standard, you could see how he sees it evolving. And if Kathy Wood is right, you go from 180 or so million users right now to 1 billion users in 4 years. Well, you know what? I mean, 1 billion users, that's enough where you're starting to see a lot of people relying on that network. And then all of a sudden, you can't take people's money anymore. Because if you pay me in Bitcoin and you can't create any more Bitcoin, now you don't have the capricious nature of a politician or a policymaker to take my savings away from me anymore.
Well, I'm
You see that?
curious.
I think that's very powerful,
Well, I'm curious because I know that you've dealt with the SEC even when you had to add, obviously Bitcoin with your firm. So with the headline of, the SEC kind of coming to Coinbase and saying, hey, if you want to pay interest on staking coins, that's actually a security, and this potential lawsuit. Do you just have any thoughts on potential regulations and what happened with Coinbase and the SEC?
Well, listen, I was on CNBC this morning talking about it. Is it a security though? I mean, because it's either a currency or it's a security, right? So if it's a currency, then it should be treated like a bank. Ultimately, I give my dollars to a bank. The bank then lends them out to somebody. They charge that person an interest rate, and then they pay me a portion of that interest, right? If you look at that program, or you look at BlockFi's business or others, that's exactly what they're doing. But BlockFi has been up against it with some of the state regulators. And now the SEC is opining on Coinbase. They're basically saying, well, you can't do that because it may be a security. Well, either it is or it isn't. And so my point is, guys, it's a $2+ trillion industry now. That's a very sizable scaled industry. We may want to opine on what it is. And that's the problem with Washington. You got a group of people that don't understand it. You got a group of people that don't like it, even though they don't understand it. You've got a few people like Ro Khanna, Senator Loomis from Wyoming that understand it and like it, but you don't have a lot of people. And so now they're stuck. And if you've got political ambition, let's say you're the SEC commissioner, you want to be the Secretary of Treasury someday. Well, you certainly don't want to upset the members of Congress that need to confirm you. So you're sitting there on a high wire, you're trying to figure out what to do. And my recommendation is make a decision. Tell us what it is, and then we'll build products around whatever it is that you guys decide. But if you try to regulate it out of business, you're not going to be successful doing that. It will go to Singapore and Hong Kong and Malta and other parts of the world, and the jobs will go with it. And I think that would be damaging to the U.S. Whatever our foibles are as a society, we're still the financial services capital of the world. And I would make a recommendation to our public servants, let's keep it that way. Don't cede the DeFi space to others because you don't understand it.
Well, I mean, the government is so protective of its prerogative over money. So do you see any threat with regards to governments, or are we past, in terms of like the fear scale of could a government ban it? Do you think we're past that now that, one nation has even adopted it as legal tender?
I think we are. But I'm old enough to now know that things that I think may or may not be true. When I was a kid, I probably believed things with more certainty. Now I have more of a probability assessment. I think that we've got a big enough ecosystem, and we have a big enough opportunity to tax it and a big enough opportunity to regulate it that it can be part of the fabric of the financial services industry. And I'll go back a month or two ago with the discussion related to the infrastructure bill. And the Bitcoiners were out there lobbying, and all of a sudden the politicians go, whoa, this is a much bigger environment. There's 46 million holders of Bitcoin in the US. I better go a little slower here. And then it seemed like when that infrastructure bill was done, I mean, obviously it's got to get passed now, it's got to go through the House, et cetera. But when it left off in the Senate, I was left with the feeling that they're letting this thing happen, and that this feels like the junk bond market in the early 80s. And so what was happening is it was a new idea, the way the junk bonds were formed. Many people thought, okay, the SEC is going to crush this idea, but they didn't. And it became a very big force in our international capital markets. So,
Well, actually, I want to chat a little bit about the markets and sort of even the status of the dollar. And it's funny you mentioned bonds, because I love listening to Jeffrey Gundlach and our bond king about some of the things he says in terms of how leveraged we are in this country. So,
yes.
I mean, we have the money printer going burr. It's one of the favorite memes of the Bitcoiners online. But in all seriousness, we've gone from sort of this 90s .com bubble to printing money, creating a real estate bubble, which crashed, to printing more money. And now we almost have a US Treasury bubble. And there are a lot of strategists who predict that, at some point they have to come in and taper, because otherwise we're going to have hyperinflation. And when that tapering does come, it's going to just crash. And maybe at first people will run to the dollar, but ultimately it's threatened. And if we do have this big crash, which I'm curious to hear your thoughts if you feel like we might, Bitcoin potentially would be liquidated as well, as people just are trying to grab money from anywhere. So do you have any views on where we're at with all of this? I mean, because we should be tapering, but we're obviously not.
Well, I think Jeff Gundlach is one of the smartest people that I know, and I've listened to him very carefully. And so he's quite negative on the whole policy dilemma, because if you start to taper, you crash the markets. And to keep things where they are, and you artificially suppress interest rates, you're going to end up with hyperinflation. Both of those things are bad. But frankly, hyperinflation is something that if you're trying to kick the can down the road, and that's what our policymakers try to do, hyperinflation, you can kick the can down the road. You can get another 2 or 3 years out of what they're doing. But I'm an optimist, and I'm going to tell you why. Because we have a tendency to think linearly about our lives. Whatever happened last week is going to happen this week, and that's sort of what's going to happen. But life doesn't really work like that. Life is moving exponentially while we're thinking linearly. And so what I tell people is recognize your human nature. You are trapped inside a 100,000-year-old piece of machinery that hasn't had a software upgrade in 100,000 years. This phone on my desk has went from 1 to 13 in like 12 years or 13 years. And yet my body is the same one that they were operating with in the Stone Age. And so you have some primordial aspects to your brain. Jeff Dawkins, who invented the Palm Pilot, wrote a great book several years ago called On Intelligence. And he explained the way your brain developed. And it turned out it wasn't ordained as much as it evolved. And it started out with a lot of primordial things going on. And then you got the neocortex, which is where everything happened, all that functionality, your consciousness and your ability to create and think about E equals MC2. And what he would say to you is don't underestimate the creativity of the human mind. Okay, that goes for men and women. We can solve a lot of our problems. And so Thomas Malthus, 1840s, hey man, we're starving, because we can't make the food. We're growing the population exponentially and we're starving. He was a very famous British economist, but he got it wrong because he didn't assess the exponential growth in technology and all of the irrigation and the farming and the fertilizer. We have more people dying from obesity-related diseases today than we do from starvation. And so I hear what Jeff is saying, and I understand the policy dilemma, but we also have the introduction of 5G. We have the introduction of robotic technology, artificial intelligence. We have vertical farming going on. We have this whole ESG movement, which will likely help us clean up the environment and reverse some of the conditions that are causing global warming. So we could be sitting here 5 or 10 years from now with Bitcoin as the standard. We've washed away these fiat currencies, which unfortunately failed at their long-term missions. And the world is embracing something like Bitcoin or something that's standardized. And
So you don't see a threat to the US dollar? Do you feel like politicians eventually will just take advantage of sort of this innovation in technology surrounding maybe decentralized finance and maybe return to a sense of sound money? Do you feel like that's possible?
That may happen, but is that necessarily a bad thing? If you told me that middle income people and lower income people were actually going to get a currency that wasn't going to inflate away. So therefore, their time that they spent working for that currency wasn't stolen from them. Is that a bad thing? I don't see it as a bad thing. I see it as a good thing.
No, I just don't know the hurdle. I mean, we have a hurdle to get politicians, I think, and central planners to understand and be okay with that happening.
Yes, we do, but they may not have a choice. Mm-hmm. Ultimately, they may not have a choice. They may get overwhelmed by it.
Yeah. Before I forget, I wanted to ask you also just what are your thoughts on the rest of the sort of crypto and DeFi world, NFTs? What do you want people to know? Because I know that for Bitcoin, it's like there's so many nuances and you have to go down the rabbit hole a little bit. And then on top of that, you have like 11,000 different coins out there for people to try to research and get a handle on. And now you have these non-fungible tokens. What do you want people to know?
Well, I'm going to start with the basics. I want them to learn about the space. And if they're skeptical, that's fine, but at least know why you're skeptical. And if you decide not to own Bitcoin, build a case based on the knowledge that you have. Don't just flippantly say, oh, it's rat poison or rat poison squared. Learn about it. I found very smart people like Ray Dalio who learned about it, ultimately went on to buy it. And so learn about it would be a big message for me. The second message I would give to people is that the world of decentralized finance is upon us. And so these NFTs are not going away. These altcoins are not going away. Some of them will go away, just the same way that many of the internet stocks evaporated from the mid 90s. We lost eToys and pets.com and stuff like that, but we did create a very robust internet-based, technologically driven economy. And so that's going to happen with DeFi. And so I would tell people to embrace that. And if they want to read a fun little book, I just wrote a book called The Sweet Life, How I Learned to Embrace Bitcoin and Cryptocurrencies, and you should too. And it's a 100-page book, which is basically a lot of what we're talking about today, about how I got myself involved, why I got myself involved, and why I like the long-term fundamentals.
Let me ask you this, because
I made it 100 pages so that people would actually read the damn thing,
Perfect. I want to ask you something, because right now we're still coming out of this pandemic. A lot of people are unemployed. Businesses have changed dramatically. I think most people would agree that we're not going back to the way things used to be. And so there are folks out there, whether they've been impacted hard financially by the pandemic or not, maybe they've heard about something like Bitcoin or crypto, and they have a certain amount of savings, which unfortunately in this country, it seems to be less and less people have savings. They're living off credit cards and debt. But the average American family, who obviously has to pay their bills, how much of their savings, if they have some, would you say to invest in Bitcoin?
Well, it's a very good question. And so I would say 1% to 5%, because I would certainly want people invested. And if they were super skeptical, I would say, okay, start with 0.5%, because you got to be involved, in my opinion. I think if you're not long Bitcoin, you're effectively short Bitcoin. And if you have 1% and I'm right about where it's going to have a big positive impact on your portfolio. And if I'm wrong, let's say Peter Schiff is right and it trades to zero, which I can prove to you is almost mathematically impossible because of the scale of the network. But let's say that he's right. You've lost 1% of your money. You've got 99 cents to play with. But if I'm right, you've dramatically improved the trajectory of your portfolio performance. So it's got to be 1% to 5%. I have cautious clients. I've been running institutional money for 3 decades. So we started with 5. It grew to 20 through appreciation. And frankly, in April of 2021, we sold some Bitcoin in the mid 50s, because I didn't want to be in a situation with my institutional clients where we were top heavy with Bitcoin. Having said that, that's a high class problem. We still have, a very large position, but I would start 1% to 5%.
Well, knowing the institutional space as well as you do, what will it take for more of them to come in? Because I think a lot of people were expecting maybe some announcements even this month, or when the price dropped down to the high 20s, low 30s. I mean, are institutions coming in? Do you see that happening, or what will it take for them to do so?
So I've been saying repeatedly that the institutions are not coming in. And I've been saying repeatedly that this is a falsehood. I don't see the institutions coming in. Are smart people like Cathie Wood coming in? Yes. Can you say, okay, well, therefore, definitionally, she's an institution. SkyBridge is definitionally an institution. Yes. But these are sort of first moving institutions. I think what you're really asking me are, will this be adopted by mainstream institutions?
Absolutely.
I think the longer term answer is yes, but I think Larry Fink is ultimately the most right about this. And what did Larry Fink say? He said, well, I don't see a lot of demand from my clients right now. So what will that take? That will take a continuous proliferation of users. And if Bitcoin does get to the billion wallets by the end of 2025, if Cathie Wood is ultimately right, and you invite me back on your podcast, we'll be talking about institutional usage. And so it's between now and 2025, but I think it's going to be closer to 2025 than now.
And what are your thoughts on how we'll get that ETF, the Bitcoin ETF?
Well, that's up to the SEC. They're going to slow roll it because of what goes on in the Congress. They've indicated that they may do something in the Bitcoin futures space due to the regulations around futures, but I think they're going to slow roll it. I don't think that happens this year. I can't really talk more about it than that because I've filed, and so I'm in the quiet period, but I think they slow roll it.
Got it. Well, as we start to wrap up here, just I love when people reflect. And one of my favorite parts of our podcast last time was when you just kind of looked back at your life and you were like, God, I wish I took more risk. And everyone kind of, at least who listens to my podcast and already has Bitcoin, they're like, God, I wish I knew about Bitcoin. I wish I bought more. But just sort of reflecting on the last couple of years since I've spoken to you, just any takeaways, this crazy pandemic that we're in, your business has obviously continued to flourish. You've taken advantage of and capitalized on crypto. Just some reflections from the last few years.
So I would say three things that I think are important. The first one is you got to drop the regrets. You got to get up in the morning and take the millstone of regret off of your neck. So if you didn't buy enough Bitcoin, big deal. Tomorrow's another day, so's today. Let's get at it. I don't wake up in the morning and kick myself in the pants because I got fired from the White House for doing something stupid. I've left that in the past. I am thinking about the future and all the great opportunities ahead of me, and I would encourage people to do that. So drop the regrets, get out of the would have and could have and should have business, and deal with the world the way it is. The second thing I would say to people is it's okay to change your mind. If you got set on something and then the facts change, it's okay to change your mind. We're like locked into this tribal society now. You're not a flip-flopper. You're a smart person. Okay, so if you see facts, say, okay, I like this, and then the facts change or you missize the facts, a clear-minded individual who's looking at things objectively has to have the capacity to change their mind. So that's important. And the third thing is don't micromanage your life. God forbid. Go enjoy yourself. What the hell? I don't know. I'm not saying that you got to go binge drinking or anything like that, but go have fun. What is it that you like to do? Carve out the time and do it because, man, it's moving fast. And as Einstein pointed out, it moves faster as you get towards the end of it. It's like a roll of toilet paper. Starts out fine, but as you're getting closer to the end, you're like whipping through that sucker. And so just go enjoy your life. That is the number one thing I tell people. Am I going to be the richest? No. But man, I've had a lot of fun life experiences. And if I wanted to pick up and travel, I go travel. If I want to, start a conference business, well, we're starting a conference business. If I want to be on a reality show. I was on Big Brother wearing a purple pimp suit on a swing. Okay. And people, can't take the guy seriously. I'm not going to give him my money. Okay. Don't give me your money, but I'm out having fun. Okay. And you should be too.
I love it. It's such a great message. And out of curiosity, does your little brother have Bitcoin? Because for those of you who don't know what I'm talking about, if you listen to my other podcast, you have a little brother from Big Brothers, Big Sisters, and
Yes.
he has been with you throughout your whole life. You paid for his
Yes,
college.
40
You're still really close.
Yeah,
What's an update on him?
He's 40. It's sort of hard to believe. He's like, I've been with him for 29 years. I met him at age 13. He's 42 years old. He owns no Bitcoin.
No.
But that's cool. He's a conservative kid. He's got 3 beautiful children, and he's living a great life. I'm very proud of him, actually. And we got a great relationship. And we go back to me yelling at him and getting him a English tutor in the 8th grade. Okay, I think it was the 7th grade. But yeah, but that was another thing. I had no money, but I was like, all right, so what? I got this job at Goldman Sachs. I'm gonna put one of these kids in the Bronx through high school. And then when I realized that this kid got pushed through the public school system, he couldn't read, okay, and he was 13, I'm like, okay, well, we're going to figure this out. We're going to teach you how to read. Okay, and ultimately, what Jackie Robinson said is true, or what Winston Churchill said, you get more out of giving as a form of living than anything else, and that's been one of the better things in my life.